What is going on, traders? In this video, I'm going to be breaking it down for you once and for all how to use the Fibonacci retracement and the extension tools. Okay, it's too many videos out there on YouTube. They're doing it completely wrong. I'm going to break it down very simple. Okay, so you, after watching this video, can go out and use the Fibonacci tool and the extension tool. Okay, so let's get into it. What you see here on your screen, we have a move from the low to a high. Okay, so we have a swing low and we have a swing high. So if we are expecting the market to come down, we will be using what we call a Fibonacci retracement tool. Everybody has it on their trading view. Okay, you can go and put that on trading view and you've got it. Okay, so we use it from the bottom and we measure from the bottom and we measure to the top of that candle. Okay, so we have identified these levels. Let's take off that. Okay, so for me, the way I trade, the most important levels, if I'm looking for a retracement and to buy a retracement, would be 618, 705 and 79. Okay, these are your levels. All right, this is the settings. These are the levels. So 0, 1, 7, 9, 618, 705. Those are the levels that you want. You're looking for the market to come back into here for you to potentially have a long trade setup. Okay, if the market comes down and goes beyond the 7-9, for me the trade is completely invalidated at that point. If I'm longing from here, my stop loss is just under the 7-9. Okay, never before the low, because that's the most obvious place for the market to go. So if you long here and the trade gets towards this range, okay, this range below the 7-9 starts trickling down, your trade is invalidated. Get out the trade and move on. Okay, so on this example, you can see the market comes down, hits the 618 and starts moving higher. All right, okay, so that's an example of a Fibonacci retracement if you are trying to buy the retrace. The same is true for the opposite when you are looking to short the market. Okay, we have a swing high and we have a swing low. So we measure exactly in the same. So we measure from top to bottom this time. Okay, so the reverse of the other example I showed you, and we wait for the market to get into these levels for us to take a short trade. So as you can see here, the market goes into the 618 and then starts to sell off. All right, so that is an example of using the Fibonacci retracement tool for a potential short trade and a potential long trade. Okay, so two different ways, just flipped upside down. Okay, depending on if you're buying a retracement to long or if you're buying a retracement to short the market. Another way that we use the Fibonacci retracement tool, okay, is when we get a impulsive move to the upside and we as traders want to play a continuation because it's a strong move and we don't expect this now to come towards the 618 and the 705 or the 79. We don't expect it because we've had such a strong move out. So we use some different fibs if we are playing bullish continuation or bearish continuation to the downside. Okay, so the levels we use for that is the 382 and the 0.45. so we have swing low, swing high. I don't measure it from this swing low because this is not the low that started the impulsive move to the upside. The impulsive move to the upside was started with this candle, so I'm measuring from the candle low here. Okay, to the high over here, and I am playing a bullish continuation. So the market moves into the 382 and starts moving higher. Okay, so the next tool that we have is called the Fibonacci extension tool. For this tool, we have 3 pivot points. Okay, so 1, 2, and 3. And the way we use this is we have the tool, we measure from here to the bottom, and we extend it to this pivot. Okay, if that's the pivot before the move down, that's the pivot that we look to move. Okay, so if we play this along, the extension tool targets that I have are 1618, 1706, 1832, 2618, 2706, 2832, and then your final one is 3236. Okay, this extension tool allows us to see where bigger players in the market potentially want to take their trade down to. Okay, anybody who made an investment here is going to be looking to take profits around these areas. So if you shorted here, you'd be looking to take profits here and then at this stage. So you'd be taking quite a lot off here, and then you'd be looking to take the remaining position off here. That's one way of doing it. Okay, that's the extension tool allows us to see where bigger traders in the market will be taking their profits. Okay, potentially the market could face some form of support at these levels, especially when it breaks the low that you measured from. Okay, so for example, if you see here, this is the low that we measured from. As soon as it breaks that, you know, most likely the next targets that they're trying to take this instrument down to is the 1618, 1706. Okay, so, and if you see here, this is a really good example because the market actually reverses. Okay, the market reverses and starts forming a bullish reversal to the upside. Okay, anyways guys, that is it for this video. Very, very simple on how to use Fibonacci retracement and Fibonacci extension tools. You don't have to overcomplicate it. Watch this video back. It's very, very simple. Get it incorporated in your trading because it's absolutely fantastic tool to be using. It will definitely help you improve your win rate. Okay, see you in the next video guys. Thank you for watching. Hit that subscribe. See ya.